Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News on our Halloween edition. So today we thought we'd talk about what's on everybody's mind, and of course that is the election on Tuesday. Before we talk about the election and markets, I want to preface this by saying we are not going to make political statements. We're not making political statements, so please don't take it as such. I know maybe some of you will, but that's not what we're doing here. So on November 5th, next Tuesday, we are going to hopefully have an idea about who's going to win the presidential election. There's a lot of other elections way down ballot and locally that are probably going to have more of an impact on your life, but everybody's worried about the presidential election. So the reality about the presidential election is half of our clients are going to be upset and half of the country is going to be upset and the other half is going to be happy with the results of the election. I'm not making a judgment on which half is going to be happy or which half is going to be unhappy. I'm just saying that that's what's going to be the result. And so there's going to be volatility in the markets around that. There will be volatility not just at the market level, but also in individual sectors. But remember, investing is not a binary decision. Historically, staying invested during an election year has proved to be quite fruitful. And whether a Republican was in the White House or a Democrat was in the White House, it really didn't matter to markets. Markets have done really well. In fact, what markets would really want is a split government, meaning whatever party's in the White House, they would rather have Congress be the other party because nothing gets done and markets seem to like that. So markets want a result more than anything. If we don't have a result on the 5th or 6th and it drags out, then markets will be volatile around that. But remember, it is not some binary decision where you should be making dramatic changes with your portfolio around the election day. The last election cycle, a lot of you were unhappy with the result, but markets did fine while Biden was president. Markets did really well while Trump was president. Whoever wins the election, this election, we know markets will do well, but there will be volatility around that date. But ultimately, the most important driver of stock prices is earnings, and Josh can talk about how earnings season is going so far.
We're pretty much 2/3 of the way through earnings season. The big meat of the index is now reporting. We had Facebook and Microsoft report after the bell yesterday. Tyler and I were talking in the office yesterday afternoon, and what's truly astonishing every earnings season's this day, in these years, the 2020s obviously, is that we have companies printing 250 billion plus in revenue on an annualized basis. It's astonishing. You even think 10 years ago, the numbers today are just quite mind-boggling. These are really the only companies that matter on an index level anymore. You have essentially 4 different businesses that represent, as a market cap, more than the entire small cap segment of the US market. But earnings season on the whole has been pretty positive. Earnings growth of about 7.5%. The top line revenue numbers have grown over 4%. The surprise factor, which is ultimately what really matters, because remember, as we remind you every quarter, everything is relative to expectations. Not quite as good as we could have hoped for. Part of that's the reason some of these large companies are investing just absurd amounts of money into artificial intelligence and all the inputs that involves, computing, essentially chips, and that's going to impact earnings to the negative. But really, the surprise factor not been as good as hoped for, but we are seeing earnings growth. We need powerful earnings growth for stocks to actually grow in to the valuations we're trading at, because they're sort of at the upper echelons of historic norms. So we'll get some of the other heavyweights in the index later this week, but on the whole, pretty good relative to expectations, but not as great as we would have wanted to see.
Remember, the ultimate long-term driver of stock prices, or any business for that matter, is growing earnings, and that continues to happen. I think last year and this year certainly surprised people how much earnings have actually grown relative to, like Josh said, expectations. So remember, we're not making any crazy decisions with our money around this election cycle, but if you have questions about your situation or your account, you can give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.